Personal finance presentation. Financial goals and activities for various life situations. Prepare to get financially fit by practicing personal finance. We're going to continue listing common life situations and common goals related to them so that we can get an idea of what our goals might be and customize our particular goals and think about what our goals might be as we go through our life. So we're starting off with single, ages 18 through 35. We have financial independence as a common goal, obviously a transition from being financially dependent to being financially independent is a big goal. Possible home purchase, so saving for a home is one of those kind of more long-term type of goals that might take some more long-term kind of financial planning in terms of the home purchase, as well as possible tax planning with regards to the home and with regards to just planning in general. At this point in time, we'd also want to be thinking about planning options, including retirement types of planning and planning just related to our earnings for taxes as well. A young couple with children under age 18. So if young couple under age 18 children, we would like to carefully manage possible need for the use of credit financing. So if we need financing options, we want to make sure that we're doing our financing options responsibly so that we can be paying the lowest cost for the financing needs, meaning paying less interest, as least interest as possible. Get an appropriate amount of life insurance for care of dependents. So anytime we have dependents depending on us, if we're the principal earner and people are dependent on us, that's when you want to think about the life insurance, because if something was to happen to you, you want to make sure that they're cared for in that instance. Use a will to name a guardian for children. So if you have a child that's going to be dependent on you and you're the sole person that they're dependent on, then it becomes more and more important that if something were to happen to you, that you are able to plan for that situation. A will can help with that, and the naming of a guardian with it can help with that. So then we have single parent with child under 18. So common goals would include get appropriate health, life, and disability insurance. So once again, if someone's dependent, that life insurance is going to be important, disability insurance, and the appropriate amount of health insurance. Make contributions to saving and investment funds for college. So anytime we're talking about children under 18, then one of those long-term goals might be saving for college. So you could start to set possibly a goal or set plan for that. We'll talk about more how to do that with our tools later, but that could be an option. Name a guardian for children and make other estate plans. So clearly, once again, if you have someone that's dependent on you, especially if you're the only one that they're kind of dependent on, then making arrangements in case something happens to you for a guardian and estate planning could be useful, meaning plans after death for the estate planning. Young dual income couple with no children. So we have a couple, no children, possibly coordinate insurance coverage and other benefits. So if you have two people, then of course you have coverage that can basically possibly overlap. So you want to be able to maximize and make sure that you're doing the best you can with the insurance coverage. Create investment program for changes in life situations like larger house and children. So you might have changes that you're projecting will happen in the future, and you can make savings for things like that, including, say, a house or children. Think about tax-deferred contributions to retirement funds. So this is the point in time where you could start saving for retirement. If you're working somewhere that has a retirement plan, such as a 401k plan, 403b plan, you can contribute to those contributions. That's not the only way you could save for retirement, but there's a significant tax benefit related to them. So if you can get a tax benefit, then it's worthwhile to save in those ways. Also an IRA, but in any case, saving in some format for retirement is a good thing to start thinking about. Unmarried couple, no children, plan to join and individual bank and credit accounts. So when you're thinking about your accounts, what kind of accounts do you want if you're unmarried couple? So you have joint plan or individual accounts with regards to the credit card. Communicate budgeting attitude differences. So anytime you're talking about two people that are kind of sharing finances and costs, you want to be communicating with them, usually generally helpful to think about, how they feel about money or what are going to be their financial goals and so on and so forth. Discuss and share joint and individual financing goals. So what are your goals that you think of as individual financing goals? What are your goals that you think of as joint financing goals? And what's going to be the strategy that you're both comfortable with regards to them? Consider a home purchase with a property agreement. So if you're thinking about a home purchase, again, you want to think about the planning on how that will look. Older couple, no dependent children. So if it's an older couple, no dependent children, common type of scenario for planning would be review financial assets and estate plan. So you might review what you have at this point in time in terms of assets and any estate planning, meaning, what are you going to do at the point of death? What kind of plan have you set up for the estate plan? Consider household budget changes several years prior to retirement. So what are going to be any kind of budgetary changes that you might have for the household? And plan retirement housing, living expenses, recreational activities, and part-time work at that point. Then we have older single person, no children, arrange for long-term health care coverage, might be something that you want to consider at that point, common goal. Review will and estate plans. You'd want to review the will and estate plan at that point, common goal. Plan retirement living facilities, which may not look like this, but it looks like a nice retirement living facility there. Living expenses and activities, and monitor investments to consider current financial needs and market conditions.